Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Cronemeyer. I'm Operations Manager for Wickham Financial Group, and I have Graham Wickham, President and CEO of Wickham Financial and Insurance Services. Graham, what happened to markets last week?
Yeah, thank you, Jeremy, and thanks for our listeners jumping on the call. Wow, we just had a wild ride. We got done with elections. It wasn't contested. We knew exactly who was going to be president, and I think that gave the market, I know that gave the market a level of relief. And that's probably an understatement. That was also followed up with the Federal Reserve cutting rates. Now, that was expected. So we saw the Russell 2000 rise about 8.5%. The Nasdaq, that tech-focused index, up about 5.7, and the S&P 500 up about 4.6%, and that surpassed its 6,000 for the first time. Bitcoin, the cryptocurrency, that was up over 11%. So what sectors were the big gainers? So we saw consumer discretionary, technology, energy, industrial sector, all really leading, powering forward. We did see crude oil prices increase about 1.5% as we saw OPEC delay maybe a production hike. Treasury yields. Now, they initially spiked, but later fell after the Fed cut those rates. Consumer confidence, that did improve for November with inflation expectations slightly down a little bit. U.S. productivity, that did increase for the third quarter, but wage pressures did remain. Overseas, we did see China roll out a $1.4 trillion debt package. We did see exports also rise about 12.7%. Bank of England did cut interest rates, but at the same time, they did raise their forecast for inflation. Australia really didn't do anything. They got pretty high inflation still. They kept it pretty steady. They're not willing to lower quite yet. In Germany, they just unfortunately have some political uncertainty putting stress, on them over there. Now, this week, we're pretty much done with earnings. We'll still have a couple trickle in. But basically, we've got the U.S. bond market that's closed for Veterans Day. We'll be looking at the federal elections and how does the investor feel about that now for the rest of the year? What will that do with the control of the House of Representatives? And will that give the Republicans a clean sweep across to be more aggressive about tariffs? And what role would that have for the FOMC and their policy? So that's going to be a lot in question this week, over the next couple of weeks, until we get some of that resolved. So we got some key U.S. data coming out. We'll be looking at the monthly CPI, some retail sales. They're expected to show some stable inflation. We'll look at probably some solid retail sales. The consumer's still spending. We're getting into that holiday season, right? Industrial production, some Empire State Manufacturing indexes are all on the calendar to be reported. Now, for the FOMC, Federal Open Market Committee, we'll get some insight from them. We got a lot of the members getting out in the community. We got Fed Chairman Powell. He's going to be doing some public speaking this week. So we'll get a little bit of flavor. They don't usually tell us or show their cards too much, but they'll be talking a bit about their expectations, maybe for the next move or their thoughts. Internationally, we're just looking at some good old-fashioned economic numbers coming out of the Bank of Japan and China. We'll be looking at some GDP updates coming from the UK, Eurozone, and Japan. Jeremy?
Gotcha, Graham. Well, I had a question for you. So now that we're past the election and we had that big rally last week, what do you see kind of for going forward through the end of the year?
Yeah, no, I'm glad you asked the question. I think we could have a pretty solid, clear runway for the market. It doesn't mean we might not get a little pullback here or there, some fits and starts. I mean, anything could happen. And when you've rallied so hard, so fast, not to mention just 1 week after the election, I think you got to expect maybe some digestion. But let's think about it. What do we got out of the way? We know who's going to be president, right? We know that the Fed's cutting rates. They did in November. They're planning to do it again in December. And we don't have the new administration coming in until January. So, and on top of all that, cherry on top of that, I guess, we're moving into one of the best times of the year. And people's mindset is probably going to be rolling into the holidays here, right?
Right.
Instead of maybe some things that are a bit more concerning as of almost a week ago. So I think the runway could be pretty clear, even though you always got to expect some volatility, right?
Right. Well, thanks, Graham. We always appreciate the insight and the expertise. And thank you to our listeners that come check us out every week. And if you want to check us out from the previous videos and webinars, go to our social media pages, our website, and you can check them out all there. And if not, we'll see you next week.
Take care.